Hello and welcome. Time for midday afternoon update. And once again for today, gold will get the forefront of today's attention. All bets, trades, and of the like within each his own risk and their own reward. It'll be follow up on gold, follow up on Bitcoin. Two big reasons, especially for people who are off the fence, people who are should be aware of Bitcoin for why I think they should be in Bitcoin. But before we get into those two reasons, I want to first take a look at this chart, then I want to take a look at the Bitcoin chart. And I'm going to start off within the single hour term time frame. And boy, does this ever look beautiful, especially with how I place in the 18 average. And well, the obvious level of resistance here intraday at 1386 hit first at 2 in the morning, hit again at 8 in the morning, was taken out at noon. It's 2:14 p.m. Eastern time as I'm doing this video. So this price action here, making its way up to this very fast move that occurred really, well. Of course, I said fast and just that. And I like how it's been grinding up and leaving this 18 average of highs. Hasn't touched it this period or last. That's a nice little thing ever since it got above it at the 12 o'clock period. On the 15-minute term time frame, we can see within this, leaving the 18 average at about 11:15 in here, there's that very big green up move and back down and comes back to where it came from. Nice little lift off. And now it's here back to this little area too, in which that it came from as well. Okay, so to me, it's clear. Like this is just magnificent. There's no Fibonacci lines in here because well, 1321 is large far behind, but the one above it, yeah, it's still scrolling. There we are. There we have it. There's a lot of profit room in here for any type of ways of looking at trade. I suppose if you're a type of paper, and I don't like calling it paper gold or paper silver. I like using digital gold or silver or any way of mechanism of trading this on a number-based system, which is really how it works. Only price pays. That there's a lot of upside room potential. And I'm going to be really, really considering this area here, 1382 up to 1386 as major, major hold support after having yet another move. Because that's where the resistance, of course, between this entire sideways manifestation came into play. And I'm going to give you a gold review. It's going to be a whatever negative review. The coin that I'm talking about is a 1/2 ounce gold coin, and it's from the Australian Mint. It's Year of the Dog, and I'm holding it, but I'm not touching it because it's in the case, and I'm going to just shake the case a bit. You should have heard that sound. I mean, I think if you're going to be selling gold, that especially like something that's like around $1,000 Canadian, yeah, $1,000 Canadian, that you'd want to have it set so that it is like completely like airtight. But you know what, gold is it doesn't tarnish. But holding the physical gold, that's how I like it. So daily term time frame, just a very beautiful break of the resistance that it had on June the 14th. And it was 8 days ago on the 12th, and I was like really thinking, okay, gold is ready to go as it was breaking out above the 18 average of highs, breaking above the Fibonacci. So when it was at like 1330, that's when I basically made a case. Hey guys, whatever, girls, people, yeah, gold's like probably going to go up, and I'm obviously uh, the early signs show that. Then this whole area of support in here, this time frame 1350. So I did say on the hourly time frame in here. So short term in here. So if that gives in, then the 1350 area. But that could happen short term, that could happen long term, that could happen both. But for now, it wouldn't be surprised if this just is a clear cut runner all the way up to the next key handle, which is I'm going to say noticeably piercing above the 1520. I'm going to say close to 1570 would be my approximate target level. 1586, 1580, yeah, we'll say 1570 as a target level. Somewhere in there, high 15s, low 16s. And who knows again after that. Let's take a look at this versus a CAD. Price action only $4 away from the high of November and only Not much at all. 1905 is a high, so that's a little over $70 away from the all-time high, which isn't much. That's about 4-ish or so percent from its level. And holding physical gold, physical silver during these economic times, to me, is a no-brainer. It's the safe play. It's the safest that there is to me. And gold is safer than silver in so many levels. One of the obvious ones for the safeness for gold to me is the bid ask ratio in the real world. If you're buying gold, it's much easier to get it closer to the spot price, or your premium isn't as high as it is compared to silver. And then the same thing on the sellback when you sell it. And then, of course, you're not looking to do that, of course, just to because. I mean, but if an emergency situation has to happen and you have to sell it for whatever reason, of course. But in economic collapse times and when these things go up wild, then it could just be like huge. Like, we could be seeing like 3,100 like just like that so fast. So I'm just gonna let the market do what it does. If it goes up fast or if it happens to move up slowly, then that's fine. And even though I'm predicting all this stuff, I'm predicting what I really don't want to happen. But I'm actually happy to have happen at the same time because being a physical possession holder and an okay decent quantity of the gold and silver, then I kind of want to see it go up because that means my net value is higher. I mean, as if I'm selling it now, but it's higher. As if it means anything on the number game because it's just a number I put in my head. I think I got around this number amount of ounces, and I know pretty much, give or take, about 20 or 30 how many I got offhand, and I do counts here and there. Its only problem is they come in at times, and then some of the ones are just nuisance counts. There's a lot of nuisance counts coins. Those are the ones that have it. I got my bullion count exact number. I just don't know where I wrote it last. But anyway, the having the physical silver ready to go, and if it goes lower, and then whatever, like I like to see it. I'd like to see rather, like I stated, I think it's gonna have a fast move up over the next 4, 5, 6 weeks. I would rather see it take 4, 5, 6 months. But the market's going to do what it's going to do, and I'm just going to adjust to whatever it does. Now let's move on to BTC, Bitcoin in at 9,358 US fiat debt notes. And as I stated, gold and silver being the safe one because in a situation, or when the situation occurs, of the debt-based system falling, however it may do so, precious metals are going to do well. But is there a guarantee that that's going to be the case with the Bitcoins and the Litecoins and all, and some of the other ones? At least in the case of the Bitcoin and Litecoins, which to me are they're the safest too, I think. But I mean, Ethereum, I'll give you credit maybe if you want to do it. I'm just not. I just don't own it. I definitely respect people, and I agree for people getting into it because it's a mechanism that I think will do well. Although I don't hold it, and if you're trading against other things, I think you're doing a magnificent job in whatever it is you're trading against. And but for now, we have economic models falling. Whether Bitcoin will work in the long run or not, if you're in it now, as long as there's one leg higher, you should be that should be enough for you because you should be able to at least be able to put your investment into precious metals later on because even if gold goes up 40, 30%, whatever, silver doubles, you'd be expecting to do a lot better than that in the crypto sphere in a situation where precious metals have that kind of run because there's a good chance this would go up obviously with it and to excruciating levels, especially when you consider the trading game that I talk about, where you take the two coins. Oh, let's get into Theta and Litecoin and let's trade them back and forth. That's a fantastic idea. Go for your 10%, 20%, 40% moves, 7% moves, 2.5 if you want to go. I mean, I'm not going that small. Um, for me, once I see a ratio start to break 5, 6%, I start looking at it. That's how I do it. So whatever volatility is, and then over the amount of days that go by, well, just fantastic gains that can come into play. But anyway, Bitcoin on this month, we are on the 20th day, so 2/3 of the way through. Nice looking candle so far, up 9.65% for the week. And I got some lines that I drew in from before, so I'll just keep them in for now. But after one, two, three, four spectacular green candles up, a sideways pause, a very beautiful red down, and then a fantastic, a little bit, even if we were to close at just say 87.33 and barely even have a pierce or a wick line above on the June 10th previous candle, that's fantastic. So it had an amazing gain and it's following through very, very well. Daily chart. And there's this ascending wedge formation that's it's got to break at some point. We're on it's 5 periods from this one in here. So within the last four after that, or the four after that, in the last where we stand, we it came back to where it came from. Then it went back to where it came from again because it came back to the previous resistance as support, and then it resisted the same area again because it pulled back on the 18th. And now we're at that level again. It took 2 days, yesterday and today included, to get there. 4 hour term time frame. Okay, well, it's the ascending triangle that I drew from the morning one. It wasn't that great of a line anyway, but what we can see within the last 5 periods is the first one, after getting above the 18 average of highs, it didn't get above much, but it got above. That's a big thing. And then 2 consecutive periods in a row within low volatility that it managed to have a correction. And then the last period, nice little lift off, getting above the short term resistance, matching, of course, as this level, these two levels we talked about before. And this one, with 1 hour and 34 minutes to play, which means it's past the halfway point, is showing solidness and holding above this 18 average of low highs. It's barely starting to rise, so it's showing that momentum coming into play. It has been, it has stayed and held above the 18 average of highs for quite some time, and this is where I'd like to have a option to be able to say, okay, I want to look at this on shorter term time frames like the hour and 15 minute, but what I want to look at is the 18 average of highs for the 4 hour term time frame, and I'm just going to do my best to draw it in. I probably could do better than that, but I'll go with that. It's close enough. All right, so then let's take a look at this on the single hour. So this general area in here, this resistance point that it broke above at 1700 hours is when it got above the 4 hour term 18 average of highs. So there's the comeback into it. So it's like the one decent sized candle to get up, and the amount of move that it took, the intensity of its one move that it had took like a half a dozen, one less, five, to come down to the start of this, where it would then meet up with what was that barely rising, ascending average. It went below it, but it didn't hold and stay below it because the support in which it finished off with was the low. A couple periods later, it retested it, but it lifted off, and there it was a half a dozen this time, not five, candles up. So it got to it at 8 o'clock, got above it at 9, and we can see in here that this candle would have supported it again, and it's lifting off once again, and within its 1 hour term time frame, it's also lifting off nicely and beautifully within where it's standing from its 18 average of highs. Okay, so 2 reasons why I think people should not only be getting into cryptocurrencies. Having Bitcoin, I think, is fair and fine and smart. Avoiding it, playing coins like LITECOIN and Theta, and some other ones. I do believe having some Bitcoin is okay, but I am very, very, very curious and interested in really on this transaction fees are iconically expensive, and they're going to get really bad, I think, in the future. But as far as the reasons to get into cryptos, number one, you want to make money. Simple as that. You have heard of business opportunities in the past, and most of the time they are too good to be true. Keyword is most of the time. Number two, insurance. You are forced into car and home insurance, but you are not forced into fiat currency getting its ass kicked. Insurance. So when I look at the first one, too good to be true. Okay, two things. One, the crypto market. Is it going to be going up with at least two coins? You need two coins. And at least one of them to go up and one of them not to go down. If one goes sideways, one goes up, that's fine. But as long as at least one goes up and at least one of them doesn't go down. How about that? And even if one goes up and one goes down, it still might work. And even if they both go down, it can still work. But don't count on making much profit if you do with two coins going down. And the trading strategy, is it too good to be true? Well, talk to the smartest person you know in math and just go over that and then let them think about that. Because I'm surprised that other people really haven't figured it out before and how, like, I mean, it should be. I mean, it's pretty, to me, I consider myself not that smart as computer programming, mathematics. I mean, there's a lot of things I don't know, but there's a lot. I mean, I know enough things, I guess, and the mathematical system, of course, works. And then the volatility, which is incorporated into it, it's probably a damn good chance that it's going to work within the trading strategy system. And then if you just want to prefer trading against Bitcoin back and forth, by all means, then I mean that's a ratio trade as it is. It's just your ratio is Bitcoin and whichever altcoin like Litecoin, then that's totally fine with that, of course. For if you sell Litecoin at higher prices, buy it back when it goes down 20%, 30%, then that's how you profit in this game, moving one coin from another. And in my liking, I like to have physical possession at the end of the day. Like earlier today, I ended up moving Bitcoin Cash from my hardware wallet into an exchange, and that like takes freakishly forever to do. As I ended up withdrawing it yesterday because I ended up buying Bitcoin Cash yesterday because I sold DGB on two different occasions for it. So I withdrew both of the sell orders that I hit, and I was thinking, yeah, I probably should just keep some in the exchange. And I don't know, I'm kind of iffy on that. And so I sent it back, and this morning I'm like, okay, DGB's falling, and Bitcoin Cash barely falling, and then starting to rise a bit. And so I move it, and the ratio keeps getting better. It was like one. Let me just show DGB. DGB is at 151. It was at like 154, 155 when I wanted to trade it, and went down. And I end up getting like 152 and change. It was very 152.3, we'll say, because one order failed and the other one didn't. Then I had to take another 153 order. So a combination of 152, 153. But I got a better trade because of it. I know sometimes that's going to happen. Sometimes it's going to not work out for you, but the trading strategy works. Now, as far as insurance is concerned, just imagine if you're in this position where you have X amount of cash to work with. And again, especially if you're in a situation where you're spending 50 bucks here, 20 bucks here, 30 bucks there, 200 bucks there, 4,000 there, or whatever, when you could not be spending it or most certainly spending at least a fraction of it, and then the remaining funds and some of it can go into stuff like this. And then you look at the case where, okay, well, what happens if inflation gets really rampant? That means a product right now that's say 295, which was say 249 4 years ago, and 20 years ago was a buck 39. Well, now next thing you know, it's 397 at the store. Okay. And they just ramp up. Your expense bill used to go to the grocery store, it used to cost you 81.75. Now it costs you 115, 122. And those expenses can really hurt a lot of the way that your monthly budgets have been going out and through all that. But now you're in a situation where this happens, and we could be talking stuff like April of 2020 and something like this. And now you're like, okay, so now your grocery bill is that more expensive. And okay, well, good thing I can turn some Litecoin into the grocery bill because I have no choice but to pay that product, which has just doubled in price in the last year. What can I do? Well, what I can do is I can take my cryptos uh, and there's your insurance paying off, just in case it happens. Because you can bet, oh no, cryptos aren't going to work out. Well, insurance that you're wrong, and then it does. Oh, the fiat debt notes are going to be so amazing moving forward. Okay, if you're right, then the cryptos go to nothing, and then whatever. And if you ratio trade this whole deal, I mean, insurance, it's annual fees. This, you could put your coins into Litecoin, put into Theta, and just keep moving it back and forth, and really never, you could gain coins. You're actually gaining coins just by trading them back and forth. So you can start off with like X amount on one and Y amount on the other, and through 4 or 5 years can go by. You could have like 10 times more of the other coins. They may not be worth anything. if you're right and fiat debt notes become so amazing, and we have fiat debt note bugs, as they used to call silver bugs. I don't think they have Bitcoin bugs. That just doesn't sound right. That's probably why that name doesn't exist. But in that sense, there, for insurance area purposes, see, the first one is to me smart on an investing kind of level. But if you're in situations where you're going to have hardship because gold and silver prices go up and because crypto prices go higher and almost everything else price goes higher, and then let's take a look at the stock market before as we move on next, because a lot of these people actually have investments into stocks, which is really poor diversification when you think about how the parlay of things would work out. And right now, the stocks on the monthly term time frame have a very interesting setup as it is itself. As it came down to the 18 average here in February of the previous year, after making this high in at 286. And back then, when the price was 286, $186 a share, it was way overextended, very, very risky to be buying it. Now at 295.31, there's the risk that I'm going to talk about is still in place, but short term, it's a much, 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 much better buy right now. So we have a retest of this level. It pierces above of this one here, comes back down. Very, very big, nice, good move. Piercing below and piercing below, large below the lows, and then holding and staying above it, large and aggressively as well, because a fierce green candle up on the January move this year, a very good February follow through to get there, an outstanding March hold and stay within the highs, a very outstanding April to get above it and retest the previous high, a very outstanding May to have a good price correction down, and then the very amazing June so far, which has got it all back within this setup, which is just a fantastic one as it's leaving the 18 average. With that being said, markets go up, markets go down. And I think I could probably. Oh, the Dow Jones chart would no longer work on here from before because of just a stupid, oh, whatever. But anyway, you got this high, you got this low, got this high, got this low. Right now, this high is where we are, and it's probably, of course, going to be higher. But the next question is where's the next two circles going to be allocated at? Where's the next high and the next low going to come? Four, if you want to buy now long term, well then hopefully you're thinking the next low is going to be here. And if there's going to be a decent sized correction, then you probably would be kind of hoping for the price action. I mean, this is a good correction here. I mean, 380. So you'd be thinking 550. Betting long now is stating you think it's going to at least pretty much double. That's to me where the risk reward is in play, because the high could be here, it could be here. And this is one of the things that I do fear if this setup short term does play out, is that maybe all it does is get up to 350, 300, 400, or 380, 400, whatever. Have just one more leg higher, and then we get our high, and then we end up getting our low somewhere down in here. And it wouldn't be a surprise if markets come back to where they came from. Now, trying to figure out where it came from is pretty easy. We then have to incorporate measures of profit taking, because when markets go up and they're worth more, that just always happens. That's why, and it's due to happen. There was a light version here, and I wouldn't be surprised again if we at least go up 15, 20% and then pull back, and how much longer it goes up. And I think stock market's going to do well for the stocks that survive moving forward, especially if they get on the blockchain. But what happened in 2008 when all the banking problem happened? Markets were at a key top and it was nowhere near as aggressive as this one, because last time we came from here to here. And then this happened. Now we're coming from here to here. The ascent has been greater. The time and allocation to get there has been greater as well. And banking problems, Lehman Brothers, Deutsche Bank. Well, Lehman Brothers was passe, but that's the exact point of what it was like back then. When you have JP Morgan issues and whatever else is going on, because the debt-based system, it's a dying breed, I believe anyway. And With gold prices moving as they are now, crypto prices moving. If we see crypto prices making new highs, 30, 40,000, one, there's going to be people getting into these golds with gold, silver, and cryptos breaking out. People are going to get into it. And one way of getting it is finding funds for wherever you have it. And one of the places people have it is in markets. And a lot of people's markets are doing fine, hence the uptrend that has been going on over the last 10 plus years. And when that happens, that's another reason again why we're probably going to have point B high happen at some point and then a correctionary low on the long term wherever it goes. In an inflationary environment, when everything goes up, stocks are a thing. Everything. So the successful companies that can handle themselves during these turmoil times, those stocks may end up working really well. For we can probably end up seeing where a company might end up losing half, 65% of its value, or how much in, or even more, in a tremendous stock market crash. But they recover it. You crash, you recover. And these things happen all the time. And it's been a good cyclical amount of time for this to happen. A lot of people give different things about these different statistical P ratios and all these other things. I've listened to them, I forget them, I realize that they're there, and I know there's a whole bunch of reasons to state that the market is topping. Of course, short term, I don't. I see this going forward, and I hate looking at those. Daily time frame probably about the same. Yeah, but I see this like this is just a spectacular bullish setup. But it might only be for one leg higher. But a lot of people, again, if that's what they're holding, is cash and that, and they could have the value of their currency go down, as well, of course, as the stock market losing in its value. And typical human nature, what's probably going to happen is, let's go back to the monthly so I can show the where we came from area. It's probably going to happen. It's just whether we have the short-term breakout setup or not means nothing. But we come back down to here. So as it's falling here, people are going to be selling their stocks in here, whatever time it is, but at that price. When the S&P is falling from 190 to 150, that's when they'll be selling. And at this point with Bitcoin, we'll probably be up to like, oh, we'll be at like 59,215 at that time. And they'll be buying Bitcoin then. And then they're going to be complaining because Bitcoin's down to 22,000. That's the type of stuff I'm expecting to happen moving forward. So as far as how much time we have, as far as the people, I'm already in, of course, and a lot of you probably already are. And if you've been considering it, uh, getting yourself educated on cryptocurrencies, blockchain wallets, trading mechanisms, exchanges. My strategy will help you out with the trading, the ratio trading and stuff like that. Even some wallet stuff here and there. If there's anyone that really want help with wallets, I mean, I've gotten pretty good at that. But I could always talk about that as well and different stuff. But yeah, that's what would not surprise me. People prices come up towards there. Same thing with gold and silver. They're going to be buying the silver. They're going to really start to be buying it. And that keyword is start. When we're like $40, start to be buying gold when it's over 2,000. And then, of course, when it's 3, 4,000 gold and triple figure silver, then it's going to get very, very interesting. Thank you for tuning in. Have yourself a great day. Bye bye.